Welcome to another awesome episode of Inside the Vault with Ash Cash. Who deserves the Medal of Freedom is my accountant. He's been hula hooping, working round shifts. IRS should have had the townhouses surrounded. We have my CPA, the world CPA, Money Making Mitch, or actually Michel Valbrun, AKA Money Making Mitch. He is a certified public accountant. He is a entrepreneur, tax strategist. He is a person that's gonna help you save $10,000 to $100,000 legally and ethically. Money Making Mitch. What's up, brother?
How you doing?
Thank you so much for being our guest. I'm excited, right? So, we right around the tax season. And so why wouldn't we bring a CPA inside the vault? But before we get into all that smoke, you have a wonderful story. And I want people to, first connect with you before they connect with all the knowledge, the prolific knowledge that you have. And so for the world, who is Money Making Mitch?
Yeah, Money Making Mitch is everything. It's my story, it's my life, and I resonate with that name so much. So with me, just like you, I came from Haitian parents, right? So my parents came to the United States, to America, with really one dream in mind. That's for me and my sisters to live the American dream, to have the opportunities that they didn't have in Haiti. And through that experience, I had some different experiences and learned things along the way. And probably one of the most pivotal moments in my life was when I was about 8 years old, right? So my parents were entrepreneurs. They had their tax business and they were entrepreneurs working in Little Haiti, Miami. And so I was 8 years old, you know what I mean? I'm coming home and I have this family portrait. And, I'm excited, I'm ready to show my mom this family portrait. And, I'm waiting for her to come home. I hear the door open, so I start running. I'm dashing to the door, I'm running to the door. And I open it, and as I see the door open, I'm looking up, right? And I see a gun pointed to her head.
See a gun pointed to your mother's head?
A gun pointed to my mother's head.
Wow.
And I froze. Like, I literally was just standing there. I was shaking. I didn't know what was going on. I didn't recognize the individual behind her. As she started coming in, I started seeing some more guys come in, and also my uncle's behind her too, and he also had someone with a gun pointed to his head. So anyways, they had us all lay out on the floor, on the cold tile floor. I'm laying down, I'm sitting there. I'm confused, I'm scared, I don't know what's gonna happen. And, in that moment, I wasn't sure if we were gonna live or die.
Wow.
And by the grace of God, they came into the home, and they found out that my family, they actually used to keep money in shoe boxes. You know what I'm saying? So that's what they used to do. They used to take some money home, put in shoe boxes. I guess they knew about it. They came in, they took the money, ran off, and in that moment, I realized, for me, I was just like, whenever I figure out this money thing, when it comes to being successful, I wanted to make sure I do things legally and ethically, because I saw how it impacted my family. So this was something that happened when I was 8 years old, and at 10 years old, my father was incarcerated and ultimately kicked out and deported out of the country.
Wow.
And so for me, I just had a lot of experience at a very young age, seeing things and people doing things, that they shouldn't be doing as it relates to money. For him, it was financially related too, that got him locked up. And yes, that's been my story. But ever since then, I've always focused and tried to do my best to learn how to be successful in business. I knew I always wanted to be an entrepreneur, got into accounting. And really with accounting, I ultimately became this tax strategist where now I'm teaching folks and individuals how to legally and ethically save money on taxes, because really, saving money on taxes is really the biggest ROI. It's not how much you earn, it's how much you keep. Yeah. And by understanding the tax code, that's how you can really maintain and hold on to that wealth.
Wow. So I want to unpack a few things, right? Because 8 years old, you have this traumatic experience, right? You said your parents had a tax business, right?
Right.
You had this traumatic experience. 10 years old, another traumatic experience. How did that affect you coming up, right? So now, from 10 years old, talk to me a little bit about, how did that affect your life? How did that affect your mindset that got you to where you are today as an entrepreneur?
Yeah, I think for me, it made me realize that, nothing first of all, nothing is guaranteed, nothing is promised. So, literally in that moment, once he left, I had to step up and be like the man of the house, at least as much as I can at 10, 11, 12, as I started growing up, and to really try to do my best to hold the family down. I have two sisters as well. So it was just us and just trying to figure it out, not having all the things that I wanted to have and, just hearing no a lot, honestly. And, I respect that, I understand that because my mom was trying to hold down the house by herself. So just hearing no so often for me was just like, I had to get on my own. So I started working early. I started working as soon as I could. I think I started working when I was like 16 years old, started off at the car wash, then started doing fast food and, kind of started moving up in that regard. But then for me, like I always knew I wanted to be an entrepreneur. So with that hustler in spirit, that hustler drive, even when I was in high school, I used to sell like mixtapes. I used to sell candy. I used to sell clothes. Like I always knew that I wanted to do it. And then ultimately when I got into college, one of my professors told me, he was just like, accounting is the language of business. You might want to consider getting into accounting because if you understand accounting, you understand everything. And then from there, that's when my passion started to grow into learning more about taxes and helping folks, like I said, save money on taxes legally and ethically. But that's kind of that was kind of the progression as to where I'm at today.
And so what's the difference between a CPA, somebody that does taxes, cousin Johnny, what's the difference and the significance around CPAs?
Yeah, that's big. So that CPA credential shouldn't be taken lightly. And I'll give you another story. So when I was going to school, I went to one of the top universities in the country as it relates to accounting. So this wasn't no regular school. And for me, I was actually doing some volunteer work. So I was doing some volunteer work with this organization called VITA. So it's like an organization that does free tax prep for people. So I'm sitting there, I'm doing the tax prep for this couple. And then at the end of it, the husband turns to me and is just like, it's cool, you helped us with our taxes, we owe some money. How can we not pay more taxes in the future? And I didn't have a good answer for him, bro. Like I didn't know what to tell him. I was good at doing the prep. And I understood how to, complete the tax return, but didn't know how to help people proactively save money on taxes. And this is the thing about it, like the education system, at least from my experience, the universities, et cetera, they don't necessarily teach you about small business taxes. They don't really teach you about, taxes as it relates to investors and et cetera. So that's when I had to do a lot of learning and self-education. I literally spent hundreds of thousands of dollars working with the top tax experts in the country, tax attorneys to learn this information. So going back to your question, as far as, tax professionals are concerned, there's levels to this, like Meek says, you know what I'm saying? There's levels. So the kind of the first tier, in my opinion, is what you have, what's called a tax preparer. Tax preparer is just an individual who takes your information, they submit it to the IRS. Usually it could be folks from H&R Block, some of the big chain, tax shops, right? And in order to be a tax preparer, there's no real regulations around it. Like you can be a tax preparer as long as you get a P10, you can literally go out there tomorrow and prepare people's taxes. You don't got to go to school to do it. You don't really need to do anything. Even if you look at like the H&R Block website, all you need to do is be 18 years old, or you don't need a GED, you don't need a diploma, you don't need any of that. You just, as long as you are of age to do taxes, you can do taxes for people. So that's the first level, right? And not to say that there's no good people just doing tax prep, but that's the first level. Then the next level is what's called an enrolled agent or an EA. So an enrolled agent, that's an individual who took a 3-part exam with the IRS, and they learned how to do taxes, and they got proficient in taxes, and they have a certain, they're very technically proficient in the world of taxes. But it's kind of like a real estate agent in the sense that, again, you don't have to go to school to do it. You just have to take this exam, go through, the process, and be able to do that. Then the next level above that is the CPA, the Certified Public Accountant. Now, these individuals, you need a certain amount of credit hours. So you need 150 credit hours. Typically, that means a bachelor's, a master's. Most of that needs to be coming from accounting. And also, there's a 4-part exam that you have to pay that has less than a 50% passing rate. So the threshold and the requirements in order to become a CPA is difficult. But then even another fact on that too is 1% of CPAs in the world are Black.
1%.
So, 1%.
Wow.
So So 1% of CPAs are Black. But then even with that, believe it or not, even that's not enough for business owners. You know what I'm saying? So there's another level above that. And because, like I said, the CPA exam and the universities are not educating folks on small business taxes per se, teaching about the loopholes or whatever. You have to get that information outside of school, outside of the CPA exam. So level above that is what I call the tax elites. All right, so the tax elite is an acronym that I came up with, and that pretty much breaks down the type of individual that you need to be looking at in order to work with on taxes as a business owner, as an investor, as someone who is generating a significant amount of income. So the first part of that is education. So did they go to school to learn about accounting and tax? The next part of that is legal representation. So can they represent you in front of the IRS in the court? So a CPA and a enrolled agent can do that. The next part of that is integrity. So remember, that's key for me. So are they following the tax code, doing things legally and ethically? The next part of that is T. So are they doing constant training, keeping up with the latest and greatest tax information? There's been a ton of changes this past year as it relates to taxes. So are they keeping up with that information? And last but not least, what's their experience like? Do they have experience working with small business owners? Do they have experience working with individuals making, $1 million, 10 million, different industries, et cetera, real estate, you name it. So that's kind of the levels. But yeah, that CPA, just generally speaking, that's a good baseline to kind of start looking into. But then even also really even challenging that CPA and making sure that they understand your business, your industry, and know what you need to do to save money proactively on taxes.
I love that. I love that. And I wanted to get that clear because I think a lot of people, especially, during tax season, people are always kind of, going to H&R Block or all these different tax places, TurboTax, and doing it themselves, not understanding that there are complexities to it, right? And so, you mentioned, working with entrepreneurs and loopholes, and I know, the president. What was the old president's name? President Donald Trump, right? Respectfully, right? So I know that Donald Trump got a lot of flack because of a lot of the things that he was doing in the public, right? So, a lot of the antics, a lot of the behind the scenes stuff, a lot of, racism and baiting and all of that stuff. But, right, I'm a big but. I know for me as an entrepreneur, I mean, Trump didn't do bad for me. You know what I'm saying? And talk a little bit about that because I know that there were some things that Trump had in place that helped entrepreneurs, even, opportunity zones and things of that nature. But now we're in a new administration and we have the American Rescue Plan. And when you compare, between what we had and what we have now, if you could break down so people could kind of understand, where we are from that perspective.
Yeah, so 100%. So the last administration with Donald Trump, he created one of the biggest tax reforms in the past 30 years, which is called the Tax Cuts and Jobs Act. So this was like a sweeping tax reform. Basically, what he was able to do was he lowered the federal tax rates for everyone. He introduced qualified business income deductions. He introduced a whole bunch of different new legislation, which, yes, does benefit entrepreneurs and business owners. And if you look at, historically speaking, when you look at the country and the tax code, it generally favors entrepreneurs, business owners, and investors because in the government's eyes, that benefits society more, right? So this is, again, what the government sees things as. So as a business owner, you're employing people, you're creating services, you're creating commerce, you're creating all these different products. You're moving money around, right? You're hiring people. As an investor, you're putting money into the market, so you're making these companies become bigger, they're growing, and they're able to scale and do all the other things that the small businesses are doing. So if you go ahead and invest and put your money in those areas, then the government's going to give you favorable tax treatment. Also with real estate too, you put money in real estate, you're providing housing, you're acquiring property and land, et cetera. So the government gives you benefits in that regard. So yes, with the past administration, he put in a whole bunch of things to, reduce taxes for business owners. He reduced the corporate tax rate to 21%. So all those things. So what Biden's looking to do, with during his term is he's actually looking to kind of reverse some of those changes that were made. with the Trump administration, because he's looking to increase tax revenue between 2 to 4 trillion over the next 10 years. So some of the things that he's looking to do, he's looking to increase some of the corporate tax rates. He's looking to find ways to increase taxes on individuals making more than 400,000. He's actually considering there's a tax loophole with real estate that's called the 1031 exchange. All right, so what the 1031 exchange, what it allows you to do is if you purchase property and you sell that property for more than what you pay for it, typically you have to pay a capital gains tax on it. With that 1031 exchange, it allows you to take those gains, reinvest it to a same property or a higher value, and defer the taxes on that. So that's one of the ways that Trump kind of lowered his tax liability. He just kept reinvesting it into other properties and not having to pay taxes on that. Biden's considering getting rid of the 1031 exchange, right? So that's going to be big for real estate investors. He's looking to increase the capital gains tax. So if you make more than $1 million, instead of getting that favorable tax treatment of 15 or 20% on the capital gains, he's looking to have you be taxed at ordinary, the tax rate, which is like 37%. So like just all these different things is in order to generate that revenue. So, you know, I have mixed feelings about it because there was so much money pumped into the economy with all of this stuff that happened with the pandemic and COVID, et cetera, right? So I heard a statistic the other day that 21% of the money that's circulating right now is like that COVID money. So it's backed by nothing. It's literally printed. It's paper money. Like, and we don't have anything to support it. So we keep growing the deficit and having a bigger like debt in the economy. So this is kind of his way to try to get some of that back. So yeah, that's forthcoming. And an interesting thing about it too, because he has the House and the Senate, chances are that bill is going to get passed.
Wow.
So we just got to get ready, mentally prepared for it, and understand that taxes are going to go up. And then even if you are under that 400,000, you got to consider this too. Like people who make 400,000, they're probably entrepreneurs, business owners, whatever the case is. So prices are going up.
Absolutely.
You know what I'm saying?
Right.
So we're all going to have to carry that weight and that burden to go ahead and try to, you know, close that deficit.
Hey, peace and blessings, family. It's Ash Cash. If you're an entrepreneur, coach, or service provider, nothing can boost your business and credibility like the instant authority of being a published author. I am a former 15-year banking executive, and it wasn't until I wrote my first book that I started to see a boost in my business. Now, I've been an author for over 10 years. I've sold over 70,000 books, all independently. I have 4 bestsellers, and my books have been featured on every major media outlet you could think of, all without hiring a publicist. I've coached hundreds of self-published authors on how to write, market, and sell their books the right way. And I have many authors that I've helped become bestsellers and even helped some make 5 figures before they even launch their book. I've been getting a lot of requests lately for book coaching since I revealed that one of my clients, Julian Gordon, made $111,000 in 2 months pre-launch on his new book. So I created this new program that is breaking down everything that you need to write, publish your book in 90 days or less, and also all the secrets on how to sell massive books as a self-published author. So go to incomefrombooks.com for more information, and for a limited time, you'll get 40% off the normal price, and you don't even need a discount code. I promise you, it's a worthwhile investment. You have a story that the world needs to hear, so let me help you build your impact and your income. Good people need to do good. So let me help you. I'll see you on the other side. Incomefrombooks.com. And then so what is your advice for an entrepreneur, right? Because I know a lot of, there've been a lot of new millionaires, especially black millionaires. We've interviewed a lot of them here on Inside the Vault that are now in that tax bracket that's above. But then to your point, right? Entrepreneurs who, maybe just starting out, at some point they'll get to that space of, millions of dollars. But then even, their ability to buy and support or get supported by entrepreneurs. So what would be your advice to an entrepreneur that, let's assume that, the tax bill gets passed, we're gonna look forward to higher taxes and increasing our products, the price of our products, or maybe the people that we were hiring. But like, what are some still legal and ethical ways for us to get rid of our taxes and not pay as much taxes?
Word. So when it comes to taxes, the great thing about being an entrepreneur is that the tax code has hundreds of tax ways and deductions and things that you could do as far as being able to write things off. So really, as it relates to being able to save money on taxes, there's 6 big ways to do it. So the first one is deductions. The second one is retirement. The other one is legal entities, insurance, legal loopholes, and then some advanced planning strategies. But I'll give you a couple as far as it relates to deductions, right? So as a deduction is concerned, so deduction is pretty much a tax write-off for your business. So pretty much anytime you spend money on your business, you're able to write that off. So the IRS has 4 requirements in order to be able to write things off. So I call it tax-free, all right? So tax-free deduction is the way that you could write things off. So the first part of that free is the expense needs to be for your business, trade, or profession. All right, so if it's for your trade, business, or profession, that checks that box and you're able to write that off. The next part of that is what I call regular. So it needs to be a regular expense for your business, for your industry, for the type of service that you're doing. The IRS calls that ordinary. So if the expense is considered ordinary, then you can go ahead and write that off. The third part of that is E, as I call it, essential. The IRS calls that necessary for your business. So if you have an expense that's necessary for your business, then you can write that off. And last but not least, economical. So and the IRS calls that not lavish or extravagant under the circumstances. So that's kind of the framework that you need to look at as far as the requirements for deductions. So as it relates to deductions, you got a ton of deductions you could take, right? So you got one of them is meals. So if you're having a business meal with a partner or someone that you're looking to do business with, you're able to deduct for that. One of the new things that they're adding is that they're allowing you to deduct 100% of your meals if you eat at a restaurant, because they're trying to get people back into the restaurants and start dining again or whatever. So, and that's another thing too, like you gotta understand, the government realizes that if they tax people certain ways or don't tax people certain ways, it's going to influence behavior. So that's one of the ways they're trying to influence behavior. Another way to do it is vehicle expenses, right? So there's an actual method and there's a standard method. So with the standard method, you could deduct mileage for your vehicles. For this year, you could deduct 56 cents for every time you drive your vehicle for business purposes. Another way is the actual method. So this is the way that people are writing off their whole vehicles, right? So there's different deduction amounts that you could take based on the weight of your vehicle. So if your vehicle is less than 6,000 pounds, right, there's a certain depreciation schedule that you could use. So the first year you could write off 18,100. If you're using the bonus depreciation, 16,100, and et cetera. So they have like a sliding scale as to how you could write that off. If it weighs more than 6,000 pounds, you can write off 25,000 in that first year. So that's another way to do it. Or if you decided to do like a lease payment, you can deduct the lease payment based on the percentage of the business use. So that's the vehicles. Another one is the home office, right? So a lot of people, if you own a home specifically, if you got a space within your home that's specifically for business purposes, then you could deduct a portion of your living expenses to the home office. So utilities, mortgage interest, property tax, like all those different things. There's a whole list that the IRS has that you could deduct for the home office. You got supplies, you got equipment, bro. There's a lot of things that you could deduct for your business. So that's key. Another way is retirement, like I mentioned, right? So retirement, contributing to a retirement account is going to help you out. So if you're a business owner, there's something that's called the solo 401k. So that's similar to like a 401k that you would get from your job. You can contribute up to $19,500 in that. There's also another retirement account called the SEP IRA, so the Simplified Employee Pension Plan. You contribute up to $58,000 in that, or 25% of your compensation. You got self-directed IRAs. The dope thing about the self-directed IRA is that you can contribute up to $6,000, and then you can invest in different types of assets. So you can actually invest in real estate in there, right, and not have to worry about paying taxes on it until you start pulling that out for retirement. So that's super dope. And then you could invest in different private market securities, et cetera. Paying your children through the business, bro. The list goes on.
All right, and I'm happy I asked that because when we listen to these changes, it's like, oh my God, what's gonna happen? But there are still ways, regardless, right? There's still ways, that people could maximize, their money. And so 2 things I'm hearing. Number 1 is don't fret, right? If you got the right person on your team that knows these rules that can help you, you'll be fine. Number 2, though, and I think that, I've always been an advocate of people starting businesses. But number 2, most of these deductions come to entrepreneurs, right? And so, talk a little bit about that, right? The advantages of being an entrepreneur, because I think that, a lot of what you just said is like, wait, but if you don't have a side business or if you don't have a business, then you can't really write any of those things off. And so even if somebody has a 9-to-5, they should have a side business. But talk a little bit about the tax benefits of being an entrepreneur.
Yeah, 100%. So more importantly than anything, like being an entrepreneur, the sky's the limit as to what you can generate and maintain wealth. Like that is one of the key successes to creating generational wealth, because you can't pass down a 9-to-5. You can't give that to your children. Yeah. You can't, it pretty much lives and dies with you. So being an entrepreneur is an extremely important way for us to create more wealth in our community, have financial freedom. But then even going back into the tax benefits, to your point, yeah, all those things that I mentioned, that's available for business owners, because again, they're trying to incentivize people to become business owners. And when people hear the word business, I think sometimes, especially if you're new, you may overcomplicate things, and you're thinking about the Walmarts, you're thinking about the Facebooks, you're thinking about the Amazons, Tesla. No, bro, you can literally just come up with a side hustle, whatever it is that you like to do, whatever it is that you're passionate about. If you want to cut hair on the side, if you want to do hair on the side, if you want to sell things on eBay, if you want to do Uber, Lyft, all those kind of things will automatically put you in the business owner category, right? You don't need to the best practice is to formally set yourself up with like a LLC, limited liability company, get registered with the state, get an EIN, have a business account. All those things are best practice, but that's not required in order for you to be an entrepreneur in the IRS's eyes. The only requirement, one of the things that they're looking at, is that you are in the pursuit of income. So as long as you're out there in the pursuit of income, bro, you're in business, period. And then we could talk about, getting everything formalized and doing everything in that way. But once you're in the pursuit of income, then you can go ahead and start taking off those write-offs and then seeing what those apply based on those 4 requirements.
Now, love that information. And so for those who may not know, right, because, we talk about write-off a lot. If you look at any post, financial advice, they're like, oh, you can write this off, you can write that off.
Right.
And so when you say write off, right, like for instance, I'm a little fresh when I go to Inside the Vault, my kick game is, and for me, this is I'm assuming, right, you my CPA, so you tell me, I'm assuming I could write off my sneakers, which means I buy these sneakers specifically for this show. Right. And then whatever I spent on these sneakers, when I do my taxes, my sneakers are an expense. And so if I spent $200 on these fresh, Jordans, then I'm not paying I'm not paying taxes on that 200. Is that correct? And also sort of explain like what percentage are you able to write off?
Word. So that's a great question. So clothing is tricky as it relates to being able to write things off, because one of the things that they look at, it's not necessarily in the 4 requirements, but one of the things that they're looking at is, can you use it for personal use? All right, so I got clients all the time. Can I write off my Louis? Can I write off, my Gucci, all that kind of stuff, right? So it depends. Like there's very rare instances where you can do that. The instance with that, there's a court case actually of someone who was working at Ralph Lauren. And one of the requirements was they had to wear polo when they went to work. So he tried to write it off. He's not a business owner. This was back when they're doing unreimbursed employee expenses where they can reimburse you. But he bought, a whole bunch of Ralph Lauren. I'm sure he got the purple label, the big pony. Yeah. Like he was fresh, right? But the IRS disallowed it because they're just like, you could wear that in your personal life. You know what I'm saying? So if you wanted to potentially write off clothing, etc., it may be more of like if you rent it, for that day. If you were doing a shoot, if you're doing, that kind of thing. If it was more short term, it's like, yo, this for that moment, get me fly, put on the suit, boo, woo, we spend this much, that's it. So that's probably the easiest way to do clothing, but it is possible. But you gotta be strategic as to how you do it. Now going back to write-offs, so this is how I would explain a write-off. So I'll keep the math simple. Let's say your business does $2,000. All right. Let's say you spent $1,000 on the business. Let's say, I know this is a multi-million, kind of business situation that we're in right now, but let's say this company is doing $2,000. Let's say y'all spent $1,000 on equipment such as cameras. That's a write-off. Let's say you spent money on the lighting. That's a write-off, because this is all to help you all pursue income. So all those things are write-offs. So those are deductions. So now you're left with $1,000 in profit from your business. That's what the IRS is looking at to determine what your taxable income is. So you have your gross income.
Yep.
And then your deductions, your write-offs, it reduces.
And your gross income is what you make.
Your gross income is what you make.
Okay.
This is everything that you bring in.
Yep.
Your write-offs, your deductions reduces your gross income, because let's say you didn't have any deductions, right? Which, again, an individual doesn't have any deductions. So let's say you have $2,000 worth of gross income, and let's say your marginal tax rate, right, is like, let's say the federal tax rate plus your state tax rate is 30%. So you make $2,000, you got 30% on that. So now you're paying let's say your taxable income, no deductions, your taxable income on that gross income on the 30%, that's $600.
Yep.
That's how much taxes you're paying.
Okay.
Now, with the write-off, the expense, you now reduce your taxable income to $1,000. So now they're looking at the $1,000, and they're saying, okay, let's say 30% on the $1,000. Now that's $300. So you just cut it off. You cut off your expenses in half.
Got it.
So this is the dope thing about the 9 to 5 or the side hustler, right? Now you could take some of your personal expenses. If you got a home, right, you could take the home office deduction. So now, again, a portion of your utilities could be written off. The mortgage interest could be written off. Like, there's different things that you could write off. The furniture that you buy for that space, you know what I'm saying? You get a carpet, you get the chairs, you get all that kind of stuff. Office equipment. Let's say for that home office now, you want to make sure that your business is in the best position possible. So you might get that iMac. You know what I'm saying? You might drop 2 bands on an iMac or other equipment, and then instead of now those not being a write-off for you on the personal side because you have a business, the IRS is like, all right, bet you're using this in the pursuit of income. You can go ahead and write that off, and again, it reduces your taxable income.
I love it. And then so two stories that I heard recently. Grant Cardone, right? Grant Cardone, come the end of the year, he had a big tax liability, and he's like, yo, I'm not giving all this money over to the IRS. So he bought a private jet, right? $50 million. I heard a similar story with 50 Cent. 50 Cent was, towards the end of the year, he forgot to spend money. So now he has money left over. He's like, yo, I'm not paying all this money to the IRS. And so he wound up buying 6 cars, right? Like buying cars to be able to lower his, his tax obligation. Me as a former banker, right? I used to have entrepreneurs come in all the time that says, look, I've made $1 million. I've made 400,000, or I've made whatever they said they made, and now they want a bank loan. But when I'm looking at their account, I'm like, nah, I can't give you a bank loan because your taxes are saying something different. You're bringing in this money, but you're deducting so much stuff that the amount of money that you're actually reporting to your taxes is 30,000 or 40,000, and because of that, yes, you're saving money, but I can't give you a loan because it's not showing that this is taxable income. And so, what's your thoughts on the pros and cons of deductions, right? Because on one end, the pros, you might be able to deduct money, and as you're deducting this money, you save more of it, you have more of it. But if you want to use other people's money, like loans and other things like that, you may not be able to do that. So talk to us a little bit about the pros and cons.
Yeah, so I think there's definitely a balance as it relates to being able to figuring out what you should be writing off. So one of the requirements as far as taxes are concerned is you don't want to understate your income, right? So meaning that all the income that you generate, you want to make sure that's reported. Like you don't want to play with that. So you want to make sure that's the right number. As far as expenses are concerned, you don't want to overstate your expenses. So you don't want to say you have more expenses than you already have. But there's not necessarily any rule to say you can't understate your expenses. So the key thing that you're mentioning is figuring out what your goals are. All right. So if you know that you're trying to get a loan, if you know that you're about to purchase a home, if you know that you may be interested in getting the PPP or whatever the case is, like you don't want to have a whole bunch of write-offs because to your point, it's going to show that you don't have any profit. So you want to really have that balance and figure out, okay, what are my goals? Am I trying to? And that's a conversation that I have with my clients when we're proactively thinking about your tax situation is like, what do you want to do next year? What are you trying to do? And then let's see if we should run it up in expenses or maybe take it easy. So that's one of the things that's going to be important. And yeah, to your point, another key thing too is like a lot of people what they do, and this is a threshold with those write-offs, right? So let's say there's a rule called the hobby loss rule, all right, which means that if you have and sustain losses for more than 3 years out of the 5 years that you're in business, the IRS is going to call your business a hobby at that point and disallow those expenses. So you definitely want to have a balance as to what you're writing off, how often you're writing off. But again, making sure that you're taking credit for those expenses if you want to, but understanding that, you're kind of making the decision like, do I want to have a lower tax liability or do I want to get, OPM, tapping into OPM, other people's money so I can get these loans, et cetera. Now, there are ways that you can reduce your tax liability. Like we talked about retirement, for instance, right, which allows you to reduce your taxable income, but then you're able to show you have assets. So now you have that money instead of it just sitting in the bank. Now you got that in the retirement account. So that's going to be maybe one factor that they're looking at as far as getting a loan. Is that, okay, you have a lower taxable income, but I see you got these assets. I see your retirement account is there, and if you need to liquidate it, you can potentially liquidate it.
Hey, it's Ash Cash. Are you new to entrepreneurship and struggling with having to figure out everything by yourself? I want to tell you about the #1 entrepreneurship community in the country. Sometimes just being in the right environment can make all of the difference in the world for your mindset, your work ethic, and your results. This entrepreneurship community is called the Morning Meetup, and it's led by my guy, David Shands, who is an amazing entrepreneur. So, the Morning Meetup is a group of entrepreneurs who meet every single morning to make sure that they're getting 3 things right: information, activity, and environment. There are so many brilliant and ambitious people who simply need access to the right information to really start moving forward in the right direction. Every single morning at 8 a.m. Eastern, Dave, along with other successful business owners from all different backgrounds, meet with new entrepreneurs to shed light on things like investing, content creation, monetizing, automation, mindset, business strategy, and so much more. To stay sharp and grow as a group, they select a book, then read a chapter each day, briefly discuss their takeaways from that chapter as a part of the daily meetup. The best part is that this community is really big on not solely just getting the right information, but making sure that everyone in the group is doing the right activities to stay on track towards their goal. Dave has done a tremendous job of creating and fostering a truly unique environment for entrepreneurs to receive high-level mentorship and accountability. To get a week access pass for just $1, head over to themorningmeetup.com/vault. You'll be able to join the community and get access to daily coaching, participate in the morning question and answer sessions to get all of your questions answered, and meet hundreds of driven entrepreneurs. So go ahead, go to themorningmeetup.com/vault. It's only $1 to start, and I promise you, you will see value immediately. All right, tell them Ash Cash sent you. A lot of my millionaire friends are making a lot of money, but instead of keeping that money in their bank account, right? So a lot of guys that I know that are entrepreneurs are cash poor, right? Because they're making money, but instead of keeping that money and paying taxes on that money, right? They rush to buy assets, right? They rush to take that money, buy a building, buy property, right? So that way, they still keep that net worth, right? They still have their net worth, and their net worth is rising from the money that they've made, but they don't have to necessarily pay taxes on it because they're buying those assets. Talk to us about that strategy.
Yo, that's a really good point. So yeah, so investing in real estate is actually a really good money move, because one of the ill things about real estate is you get what's called depreciation. So now this is like an invisible write-off that you get. You don't have to spend and come out of pocket for the depreciation. So depreciation is just pretty much writing off the building over a certain amount of time. So let's say you got a residential property, you could write that off over 27.5 years. On the flip side, let's say you got a commercial property, you could write that off over 39 years, right? So you get this write-off every single year, and what it does is on your tax return, it's going to show as a loss, right? So let's say you have your rental income, it's coming in at 1,000, but then let's say that appreciation amount, depending on the property value, let's say it ends up being $2,000 on appreciation. So now your real estate portfolio is showing at a loss of $1,000, and that loss could actually be applied to your active income, right, up to a certain amount. And then you could reduce your taxable income on that side. But yeah, to your point, when you pull up and you go to the banks and you're showing them your assets, now you can say, well, look at my portfolio. My net worth is $1 million. You know what I'm saying? Because I have this property over here and I got this multi-unit over there. So yeah, that's a really good strategy with as far as being able to take off write-offs. And then even another one with real estate is there's a strategy called tax segregation. All right, so what tax segregation, what that does is instead of having to write off the building over 27.5 years or 39 years, you could actually hire like an engineering firm to go ahead and assess the building and see, okay, this asset over here, this carpet, it's a useful life of maybe 7 years, 15 years. Kitchen appliances, different things within the home. So they're breaking it down to even different smaller depreciation classes to help you accelerate what you're writing off. So you take bigger write-offs for that year. And again, you're still, the value of the property doesn't decrease per se. Just for tax purposes, you're just showing maybe more losses or whatever, but you still have that asset. You know what I'm saying?
No, I love it. I love it. And then you talked earlier about PPP loans, right? How is that beneficial for entrepreneurs? And if you could break that down on how they could take advantage of them.
Yeah, so the PPP, the Paycheck Protection Program, was started due to the pandemic, right? So the government came in and they funded and put billions and billions and trillions of dollars out there in the economy to support small businesses. So one of the great things with the PPPs and one of the benefits is the interest rates are ridiculously low, like it's 1%, right? Yeah. So it's almost free money in a sense, right? Not 100% free, because again, the government's creating it, so we probably have to pay taxes on it. The country as a whole has to pay taxes on the back end. But then also, too, you have to use that money in a certain way. So one thing that you have to use your money on is what are called like payroll expenses. So if you got employees, this was a way for the government to incentivize business owners, like, yo, make sure we don't want any layoffs. We don't want you getting rid of anyone. Make sure you hold your people down. Continue paying them out at least for a few more weeks. You know what I mean? So that's why with the calculation, they have this calculation where it's like, okay, how many weeks, or I believe it's basically equates to like 10 weeks or 2.5 months that you're holding down your employees or whatever the case is. So yeah, the PPP is a great opportunity for you as a business owner if you're looking to
get the rave.
Yeah,
No, I'm joking.
Not the rave.
That's a joke.
Not the rave.
I want to throw you off a little bit. I can't get the rave with the PPP. Okay.
Not the rave. No.
Okay.
People tried it. And
I've heard some people try to get some Rolls Royces, some Bentleys.
It can't go down. Yeah, it has to be. There's certain expenses. They're looking at payroll expenses, more like operating expenses. So your rent, things that are going to keep you in your business. Also like mortgage interest. So different things. That portion of the loan could actually be forgivable. So as long as you're using like 60% on those forgivable categories, then you can go ahead and get forgiveness on it. So pretty much, you could take the write-off and then you don't have to pay that portion back. So again, it's more free money, and they defer when you got to pay it back too. So they give you, depending on the type of loan you potentially get a deferral of up to a year to not have to pay that back. So it's a great opportunity if you're a business owner. They're doing another round of it. Fresh off the presses, like literally today, they just announced that the deadline, they extended it out to May instead of March 31st. So now you got an extra time to go ahead and pay it. To be able to go ahead and get that access to that funds. The funds are running out though, so you want to make sure you don't wait till the last minute to go ahead and do that. But yeah, that's a great opportunity for you as a business owner. And then one little hack too, and we'll actually go and tie it back to what we're talking about deductions. So with the PPP, it's a loan, right? So they're going to be looking at your prior year tax returns. And again, if they see a zero, if they see a negative, you're not going to get that money, right? Because they're going to say like, well, what? No, what? I mean, what's the point?
Yeah.
So that's another thing. So you want to make sure that again you're showing profits with that business. But then another unique, what some lenders are actually doing now is they're actually allowing you to use your gross income instead of that net loss. It's very few lenders that are doing it, but there's actually a few lenders that are allowing you to use that gross income number because of based on like future, profits or potential or what you probably would have been on track to do. So that could be an instance where you can potentially get that money, but again, like I said, that's pretty limited.
Oh man, powerful. And so let's talk about the stimmy.
That
right?
stimmy.
That stimmy. So, we got, people are getting stimulus checks. What are there any tax advantages, having getting a stimulus check? And in what ways can people maximize that, from a tax perspective, if there's any?
Word. So with the stimulus checks, so they did another round of stimulus checks in addition to what was paid out in December. So this go around, they're giving people $1,400 per person, right? So what that means is, but there's phase outs. It's up to, you have to make a certain income amount in order to be able to qualify for it. So if you make $75,000 or less, then you'll qualify. If you're a married couple, you can do up to $150. Once you exceed that amount, then there's going to be certain phase outs. You start losing some of that benefit. So that's how the stimmy works. But as far as you being able to utilize that stimulus, what I recommend, and it's kind of like you can almost see it as a tax refund. All right. So what I recommend anyone do is, if you're in a position to, you want to make sure at least you're saving 10% of that money, putting it into a bank. I would also recommend that you look into investing that money. So maybe looking into getting into stocks, maybe starting that business now. Now that's enough business, that's enough money for you to go ahead and get that LLC started. That's enough money for you to go ahead and get some of that initial startup costs to go ahead and get your business up and running. So that's how I recommend using the money if you're in a position to do it. Again, I know people have been impacted by the pandemic, layoffs, et cetera. So, they may need to use that stimulus money in a different way, but because, again, we're probably going to experience some inflation because of all the money that's been pumped into the economy.
And what's inflation? Inflation
is pretty much the devalue of the dollar. So basically what that means is, let's say today with $100,000, there's certain things that you could buy. We know what what you can get with $100,000. 10 years from now, that $100,000 can't necessarily buy the same things that what it could buy today, right? The prices of everything is going up. So that $100,000 is now going to be devalued, and it's going to reduce your purchasing power in a sense. But yeah, no, the stimulus check came out. That's all part of what's called the American Rescue Plan. So there's another great benefit that they put in there too.
AARP. No, it's fine. ARP. That's out to Joe Biden.
I didn't think about that. Yeah. So
ARP.
ARP.
My fault.
ARP. No, it's all good, King.
No, the only reason I said that though because I'm watching videos of Joe Biden going up steps and falling.
I see that, yo.
Yeah.
So he fell a couple of times.
Yeah.
Shout out to Joey.
We did
so
it,
yeah,
Joe.
we did it, Joe.
We did it. I'm sorry.
Okay. So with the another benefit of the American Rescue Plan is they are now allowing people who receive unemployment benefits to not have to pay taxes on that first $10,200.
Oh, nice.
Which is huge, right? Because before last year, a whole bunch of people got unemployment and they didn't know to withhold money, or they didn't know that they had to pay taxes on it. They just thought it was free money. It's like, all right, bang, we did $300, I'm good. But now they're allowing you to exclude up to $10,300. So if you already did your taxes and you missed out on when they made that announcement, the IRS is telling you to just chill, relax. They're going to go ahead and pay you out, cash you out if you happen to qualify for that benefit. But if you haven't done your taxes, then you can go ahead and once you fill it out, it's automatically, depending on the tax software you use, it should automatically be given. And also they extended the child tax credit too, which is basically a tax credit that you get for having children. So if your children are 6 years old or younger, so younger than 6 years old, you can get $3,600. If they're older than 6 and under the age of 17, you can get $3,000 for that. So it usually is $2,000, but they extended it out. So they're giving you more money. So there's a couple things that, they did to really help the economy, kind of put more money back in the people's pockets. I think that bill was like 1.9 trillion or whatever. So, more and more trillions being pumped into the economy. But what I'm saying, that's what they did.
And I mean, you mentioned child tax credit. And I know, I mean, you've helped me behind the scenes. My daughter's 12 years old. You've given me some great advice on how I can reduce my tax liability by hiring my daughter, right? So my daughter's my personal assistant. And so if you email me, she is my 12-year-old, right? She'll be 13, but my 12-year-old answering, and we pay, give us that game a little bit, because I know a lot of people who are watching, watch this show with their kids, and they're gonna benefit from it. But how can you lower your tax liability by hiring your children?
Yeah, so this is one of the beautiful loopholes in the tax code, is being able to not write off your kids, but being able.
This is how you write off your kids. You don't like them, write them off. Nah, I'm joking.
That's the title right there. How to write off your kids.
Yeah.
This is how you pay your children, again, through the business, y'all. So make sure, again, this is one of the benefits of being an entrepreneur now. Yeah. So you're able to pay your children through your business. You not have to pay taxes on it. They don't have to pay taxes on it. So basically the way it works is you have what's called the standard deduction amount. So the standard deduction amount is the deduction amount that the government gives everyone. So typically for this year, it's $12,550. It changes every year, but as the time of recording, that's what it is. So as long as you pay your child who's under 17 years old $12,550, through the business, you could take that as a deduction. And you want to make sure that they're doing things like legitimate work for the business, right? So you want to make sure that they have a job description. You want to make sure that the job matches their age or whatever, right? So I got people who try to push it. You know what I'm saying? They try to do it with their newborn, their 2-year-old, 3-year-old.
Yeah.
I'm just like. Yeah. You know what I'm saying? You're pushing it really, in my professional opinion. I think 7 years old and older is a good age to do it. So that 12, 13-year-old, that's perfect. You know what I'm saying? And the great thing.
Not my 5-year-old, because AJ, he's always co-signing. He be ad-libbing for me. I can't use my 5-year-old.
I'm not saying so there's no age minimum.
Okay.
You know what I'm saying? But like, you just want to make sure that, I think 7 years old is a safe age. But if he may be ad-libbing, if he's doing something that you feel like, okay, this is worthy of paying someone through, you know what I'm saying? And you could prove it to the IRS and support that, then, you know what I'm saying, you'll be straight. So there's no age minimum to do that. Yeah. Also, too, with that strategy, you want to make sure they have a separate account. You know what I'm saying? So you can't just cash them out, just just give the money. They want to see that money coming from your account to another account.
Paper trail. So
yeah, paper trail, right? Yeah. So you want to make sure that paper trail is gorgeous, as Hope said, right? Yeah. You want to make sure that paper trail is gorgeous, and making sure that the child really has access to it. But you're the parent, so you're probably gonna tell them like, yo, this is what you're using the money for. Yeah. You can go ahead and get the J's. That's if you really want to get your kids fresh.
Yeah. You
go ahead and pay them through the business.
Yep.
You know what I'm saying? And then they could take that money, use it how they want to. Then they might be able to get the J's in that way, because that's payroll. Boom, you put in the account, and then they can use that money how they want to.
Yep.
All right,
perfect,
so that's
perfect.
That's the way that works.
And so my last question for you before we get into our lightning round. I know that there are a lot of people who cannot afford a CPA, right? Because you got to pay, right?
Right.
And some people might be interested in, potentially software or give us a few softwares that people could use that are probably good, to file their taxes.
There's some great softwares that you can use. Obviously, a lot of people know about TurboTax. That's kind of the most popular one and well-known software out there. The great thing about TurboTax is it's question-based. So literally asks you the right questions that you need in order to be able to have it fill out the form for you on the back end. So you don't have to see all the ugly forms and all the boxes and all that kind of stuff. They go ahead and handle that for you. So TurboTax is one. Credit Karma actually put out some tax software that's available now to people to use. H&R Block has some tax software that you can go ahead and use as well. Go ahead and get your taxes done as well. And then as far as like just general accounting softwares that you need, there's one called QuickBooks. So QuickBooks is an accounting software that you can use to organize your finances and your business finances. The great thing about QuickBooks is it's automated, right? So you can go ahead and connect your business account to the QuickBooks account, go ahead and have that do the transactions and organize it for you. So when it comes tax time, you know, you have your financial statements in order, right? So you can have your income statement, which is your income and expenses, balance sheet, depending on your business. You're gonna have your assets, liabilities, and equity. And then last but not least, another great app to use is called MileIQ. So if you want to go ahead and track your mileage, every time one of the things that are required is if you're going to go ahead and write off your vehicle for business purposes, as I mentioned, you want to make sure you're tracking the miles, even if you're using the actual method, because you want to show the business use of that and have that as evidence in the event that you get audited. So those are probably some of the best apps and things to look into as far as, you know, taxes are concerned.
All right, so look, y'all, invest in a CPA because literally he just gave you $1 million worth of game just now. I got like 1,000 more questions, but to respect the time, we'll do something nice for our viewers, right? Because I know you have a program,
yes, sir.
that also gives out a lot of this information. So we'll do something nice later on where you can give some type of discount, something like that.
Yeah.
But we are inside the vault, so I want to do our lightning round, and as a CPA. Someone who has always been, into money and really kind of learning how to maneuver money. I want to get in your personal business, right? We want to get inside your vault. And so our lightning round, what I'll do is I'll give you a word. And then we're gonna flip it. We're gonna flip the word for inside the vault, right? And so the first word I want to talk to you about is deposit slip, right? When you go into a bank, a deposit slip is when you go into the bank, you fill out the deposit, you put the money into the bank. But for us inside the vault, deposit slips are any missteps or mistakes you've personally made with money. So
Word.
Talk to me about a deposit slip, a time that you kind of messed up with money.
Time I messed up with money. Wow. I'm trying to think about this. Okay. There's been a couple of missteps. I would say, you know what? And it may not, this could be controversial, but I'm gonna put it out there and say it. So one of the things I did is I was just really into paying off my debts. You know what I'm saying? So I was going hard with paying off my debts. So I had student loan debt. I had over $30,000 worth of student loan debt. And, I literally, hustled, worked, and got that paid off, ASAP, right? To say that. Plus I had deferment. The interest rates are super low, like 3% on it. But what I probably should have done or could have done, again, it's a personal decision, but now that I'm older, I could have used that 30,000, whatever the case is, use that money. I could have used that money to put down on a investment property at a young age. I could have taken that money and used it to invest in the stock market or start my business or whatever the case is. So I was just so eager to get rid of that student loan debt. You know what I'm saying? That's the way I did it. And now it sounds like they're about to forgive it anyway. So I could have just chilled and, and get a free ride.
And I like that you said that though too, because I know that there's a lot of people, other gurus that are always pushing debt-free lifestyle, debt-free lifestyle, debt-free lifestyle. And you're absolutely right. That 30,000, that's a lot of money that could have been taken buying an income-producing property. That property could have been income cash flow. You would have made more than 30,000 because now you take the money that you're making from the apartment. Now you're paying off your student loan. And then once the student loan is paid, you still have that asset, right? And so please, right? Asset over liability. Please, right? I know your liabilities, some people are emotionally attached to debt. But I love that example, and I'm glad, thank you for being transparent, because I think debt is emotional. People want to pay it off because, I just don't want to have any debt. But,
Word.
Paying off that debt and not creating an asset, like you could have still been eating, it could have been forgotten, you know what I'm saying? But it's all good though, a loss ain't a loss, it's a lesson, you know what I'm saying? All right, second word, interest rate, right? And so interest rate is the money that you pay when you borrow money or the money that's paid to you if you lend money. But for us, interest rate is about, how interested are you in, the work that you're doing? Like, what is your interest rate? But this is more so about your why, right? Like, so how interested are you in what you're doing now from a tax, being an accountant? But also, like, why? Like, why, whatever your interest rate is, why is your interest rate that high or low?
Yeah, I take again, with this whole tax journey that I've been on, helping folks save $10,000 to $100,000, it's life changing, bro. Like, I think once one of the most gratifying things for me is once I share the tax strategies with people and to see how their mindset shifts as it relates to taxes, right? So people usually look at folks who pay a little money in taxes as evil, criminal. You need to pay as much as you need to in taxes or whatever the case is. Nah, like once I break it down and show them like these are available to you, like even that paying your children through the business, people are always paying their kids anyways.
Yes.
You know what I'm saying? So like being able to understand like, yo, I can do this, fund my child's college this way, create generational wealth. I can even add a retirement account on top of that. And then once they graduate, they can have over 6 figures in the bank. So like really helping people understand, you know, tax wealth as well. So that I always preach tax wealth is you can use taxes as a way to create generational wealth.
No, I love it. I love it. And so last but not least, credit check, right? And so credit check is what banks use to see what your credit worthiness is, right? But for us inside the vault, credit check is the people we want to give credit to, right, during our journey. And so, for you, who would be part of that credit check? Who are some of the people, books, mindsets? Like, what are those things that you want to give credit to, in your journey and to be where you are right now?
Bro, yeah, there's so many people I could think of. I would say, really, for me, I've been so inspired by the hip hop culture.
Yes.
Prolific
prophet,
prophet,
right?
right?
Rest in peace, Nipsey Hussle.
Right, rest in heaven to the king, Nipsey. So yeah, Nipsey Hussle will be one of those where I was just inspired by his movement. Actually, a quick story on that. So like, I was out in LA getting my mind right, trying to get my money right for the new year. This was 2019 before the pandemic hit. So I'm in this conference. I realized it's Nipsey Hussle's birthday. So I pull up to the Marathon clothing store that had it shut down, and there was a mural in the back. So I'm looking at the joint, I'm reflecting, I'm thinking about, at his life and his impact, and I see the word prolific on the right side of his face. Right, and it just hit me, you know what I'm saying? And it resonated with me so much because, I kind of felt the spirit that tells me, go, like move. You know what I'm saying? Time is now, like you can't play with life. Because this king had so many things that he was trying to do as it related to, financial literacy and investing and buying back the block and, putting people on, and, Bitcoin and, all this other stuff. Yeah. So, yeah, that was inspirational. That's what led me to write the book Prolific Profit, How Successful Business
And you had a
Maximize
great
Profits.
book coach, too, who helped you with that.
Oh, yeah. Big shout out to
book coach.
Shout out to the book coach, Mr. Ash Cash, put me on and really helped me, get the book in a way that, that's going to help me be a bestseller, right? And I was able to do that. So that was a blessing. And then also, obviously you would be.
Oh, no, I wasn't asking for my credit check. I just wanted to,
but I'll give you a credit check.
Shameless plug, though. You know what I'm saying? Y'all need y'all book written. Hit me up.
And I got you on another one. I got 10 Tax Commandments, which is the joint that's coming out. I'm dropping that.
Nice.
Tentative date, May 26th, Biggie's birthday.
Yep.
Rest in peace to the king as well. So Biggie's another one another influence, Hove, Diddy.
Yes.
So those dudes. And then as far as like books, Rich Dad, Poor Dad, of course, was a huge influence for me because it helped me realize that business owners and investors, they make the most amount of money, pay the least amount of money in taxes.
Absolutely, yeah.
So that was key.
I love that you said that, that you got a new book coming out on Biggie's birthday, right? 10 Tax Commandments. And so, look, I'm about putting people on the spot, right? Because I heard you got some tax bars, right? I'm gonna put people on the spot. So I remember, right, March 9th, rest in peace. I'm on Instagram scrolling through, and I hear Biggie, a Biggie beat. Then I hear like, yo, it's the 10 Tax Commandments.
Word.
Yo, can you drop some tax bars?
Some tax bars.
Drop some tax bars for Inside the Vault. Exclusive. You know where you heard it first.
Let's get it. All right. I've been in this game for years and made me an animal. There's rules to this code. I wrote me a manual, a step-by-step booklet for you to get your game on track. The feds off your back. Rule nombre uno. Let the IRS know how much dough you hold, cause Evasion breeds penalties, especially if that prep messed up. Watch your tax go up. Number 2, document expenses you could prove. Don't you know them boys treat lying like violence? Take it from your highness. I done see mad cats and chicks cut for their schemes and tricks. Number 3, go form a LLC. A lawyer set that up. Properly draft up. D-Day and the stayed up. For the big bucks, they'll get that paperwork cleaned up. Word up. Number 4, I know you heard this before. Always rely on your CPA guy. Number 5, never tax prep where you rest at. I don't care if they do it free, tell them leave. Number 6, that tax advance credit, debit. They think they're doing you a favor, forget it. 7, this rule is so underrated. Keep your personal and business completely separated. Business and blood don't mix like politics with no tricks. Find your business serious risk. Number 8, know the day your taxes due. If you miss the deadline, they'll be coming for you. Number 9 should have been number 1 to me. If you start a business, stay away from hobbies. If they thinking it's a hobby, they ain't trying to listen. You'll be stressing in the kitchen when them letters start hitting. Number 10, a strong word corporation. Strictly for bizmen, not for freshmen. If you ain't got investors, then say hell no. Cause they gon' want your money, rain, sleet, hell, snow. Follow these rules, you have mad bread to break up. If not, 24 years on the wake up. Flow hit your temple, watch your friends shake up. Caretaker did your makeup. When you pass, my bad, I hope you rake up a lot of cash with beachfront in Jamaica with the Michelin star, shut the hook and stake up. Gotta go, more returns to make up. And word up, tax.
Hey! Yo, super dope. Yo, I love that. Big bars, tax bars. Yo, write that down. Get those bars. And so talk to the people if people wanted to connect with you, if people, where can they find you? Talk to us about your program that you can help them, and then if we could do some type of discount, maybe use a code VAULT and give them some type of discount. But tell the people where they can find you.
No doubt, yep. So y'all can link up with me at Michel Valbrun, so MICHELVALBRUN on all social media platforms. I'm most active on Instagram. You can find me on YouTube, Facebook, Twitter, all of the above. So make sure you tap in. And then as the King Ash Cash said, yes, I got a new course out, Tax Wealth Elite. All right, so we talked about what the elite is and what that means. So Tax Wealth Elite is helping y'all make sure you save that $10,000 to $100,000 legally and ethically in taxes. There's a whole bunch of gems that I'm dropping in there as far as real estate, paying your children through the business, creating generational wealth, insurance, retirement, different tax loopholes that are available to you. So definitely tap in. Yeah, we're doing a little special discount for the viewers at the Vault. So what I'm gonna do is I'm gonna hook you up with 20% off. This program it's a premier program. You're working with me. It's a coaching program, so it'll be live and tap in. Yeah, this is the way to do it.
And what code they're gonna use? Use VAULT.
Let's do VAULT.
VAULT. Use VAULT. Money making Mitch.
Hey.
Michel Valbrun, brother. I appreciate
God.
you. Thank you so much
Appreciate
for
you,
all
too.
you do personally, right? But then
Right.
also, everything you're doing, for the culture.
No doubt.
Because I think that's important that we gotta know, right? That for the culture, there's 1% of CPAs that are black, right? 1%. And not all that 1% are for the culture. So let me be clear, right? All your right? All your skin folk ain't your kin folk, right?
Hey.
And so tap in. Mitch is for the culture. He understands the culture. And so if you need somebody to help you get your taxes right, do everything, make sure. And it's bigger than taxes. I want to make sure that you understand that it's bigger than just filing your taxes. It's about how do you maximize your money as an entrepreneur. But we are closing the vault. I am Ash Cash. Thank you so much for tapping in, for tuning in. Inside the Vault with Ash Cash. I'm going to see y'all next time, same place, in God's will. Peace.
Peace, y'all.